Welcome to the weekly market update. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubil. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading reports, signals, and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. The US dollar had mixed results versus major pairs during the past week. The greenback advanced against the euro, pound, and Swiss franc. But the turnaround in commodities boosted the Australian dollar, New Zealand dollar, and the Canadian dollar, with the yen also appreciating versus the US dollar because of safe haven flows. The biggest event last week on the Forex calendar was the release of the Federal Open Market Committee, or FOMC, January meeting minutes. The notes showed federal members are concerned about economic developments abroad, but confident on U.S. growth. The biggest point for investors was that although the March FOMC meeting rate hike appears to be of less probability, the probabilities of at least one rate raise this year are back on. Most central banks skipped February and were returned to action in March. Cooperation has been hinted at by the International Monetary Fund, IMF, and the Organization for Economic Cooperation and Development last week as a way out of the global economic puzzle. The Group of 20 meeting at the end of this week should spark a more unified response to what remains a global crisis. In commodities, the price of energy has been more stable after the joint announcement of a production freeze by the Organization of the Petroleum Exporting Countries, OPEC, and Russia. The details are rare, and although Iran supports the agreement, in principle, they are likely not to follow through as they want to at least match their pre-sanction production levels. Commodity currencies have been linked to the price of crude ups and downs and will remain heavily correlated as long as a clear agreement is reached or there are positive signs of rising demand. What about sterling? The pound is under some free selling pressure this week after Prime Minister David Cameron finally announced the long-awaited EU referendum on June 23rd. The announcement was done after what was described as the first cabinet meeting held on Saturday since Falkland War in 1982. Initial focus this week was indeed by sterling's reaction to the EU referendum announcement, and we could see the pound lead the way down. There will be only one tradable economic news this week, what I will discuss after that some points to pay attention when you trade news with examples. So we have only on Friday 26 at 1:30 p.m. U.S. quarterly GDP, gross domestic product. U.S. prelim GDP will be released on February 26 at 1:30 p.m. London time. U.S. prelim GDP is the second release for the fourth quarter of 2015, which is expected to drop from the 0.7% reading on the advanced release, with the Federal Reserve likely to keep rates unchanged in March or even possibly make policy more accommodating. This release could play a big part in that decision. So it's forecasted at 0.5%. Previous release was 0.7%. How to trade this news? We are looking for a deviation between 0.3 from the forecasted figure of 0.5%. The deviation number is the difference between the actual release and the forecasted number. Therefore, if we get a 0.8% on the second quarterly Q4 2015 GDP, it would be US dollar positive. And we will make rise option. So we'll make rise option at 0.8% or more. However, if we get a 0.2% release or worse, then we would make full option on the US dollar. Since this is a high impact release, strong market volatility is expected immediately after the release on Friday. We will be looking to trade this release using after news retracement method. As usual, we will wait for the release, wait for the market to spike, and after market spike, we will wait for a decent retracement before making the option, buying out the option. And I will show you example on how to trade and how to make this retracement trade. And as usual, if we don't get the deviation number, so if we get number between 0.2 and 0.8, I expect the market just to follow the pre-release market condition and sentiment and just follow the pre-news trend. Here is example of the how to make the retracement trade. if our deviation number is hit, our surprise number is hit, not the number between or around the forecasted number, we will wait for the actual release at this point of the spike here, and after the news release we will see how much deviation we got. If it's the deviation number, so we will wait the spike. As you can see, this is spike. And then after some minutes, with some retracements, we will enter the market. So in the event that we do get our deviation, we will be looking for this after news retracement trade, and you will do the 3 waits. Wait for the deviation number to hit, wait for the market to move with momentum first, the spike move, and wait for a decent retracement before entering the market and buying the option or placing your trade. You can wait for this retracement between 5 till 30 minutes, up to 40 minutes, according to the market reaction. And there is always another scenario. If we don't get the deviation number, if the number gets as expected. This was a slide from last webinar of UK CPI. It was released on 16, forecasted at 0.3, and the actual release was exactly as forecast number, 0.3%. So the deviation number was not hit. And this the chart was before the news release. The chart you can see clearly the trend is downwards. So how to trade this news? Here we can look at the 3 charts, one daily chart, one 30 minutes chart, and one 10 minutes chart. First, we know that we have downtrend. Market direction is downwards. And the deviation number was not hit. So we will just follow the pre-news trend. You can see this blue arrow where the news was released. We have downtrend, deviation number was not hit, so we can just make full option based on the direction of the market before the news release. So all you have to wait, if the deviation number is hit, also to wait for some minutes to enter the market and make your option. In this example, we could make full option with expiration of the end of the day. I want to remind you, if you missed our webinar or want to watch it again, you can watch it at binary.com YouTube channel. You can also find instant updates of the news at my resource page on my website, ehabjubail.com. So then, I would like to thank you for attending today's webinar. We will hold the following webinar next Monday. Goodbye and see you next time.